Hello, good morning everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Friday the 7th of March. It's Non-farm Payrolls Friday, so big day for the markets generally. Yesterday there was some significant moves that we saw, certainly in the currency pairs, after and during Draghi's press conference for the ECB. Basically, Draghi was alluding to the fact that the ECB wasn't going to be or easing monetary policy in the immediate term. Basically, the forecasts for both inflation and growth remain fairly on the upward track, slightly depressed at the moment, but certainly on the recovery time as well. So what Draghi's looking for is 1.5% on the inflation figure for 2016, and that would certainly suggest or downplay the prospect of any sort of rate cut in the near term. He also said about the fact that the ECB were unlikely to be stopping the sterilisation of their bond purchases as well. So that generally has pushed the euro significantly higher, being far less dovish than perhaps some had expected him to be. Overnight, the euro has sort of calmed down a little bit. It's not far off its key high from December, and also currencies have calmed down as well. So markets generally, the S&P pushed for apparently a 50th time in the past 12 months. The S&P has closed at a new all-time high, so that's happened again overnight, and certainly the Asian markets reacted positively. Nikkei 225 was strongly higher on the back of once more the Japanese yen weakening. However, as we moved into the European trading hours, these markets have calmed down somewhat. Looking forward to these non-farm payrolls numbers at 1:30. Now, payrolls in the last couple of months have been disappointing. You've also seen significant misses of expectations as well. So 196 was the January number, or for December's payrolls. The expectation 77 was the actual. 185 was the expectation last month. 113 was the actual. 150 is the expectation today. So the expectations are getting closer to the actual in the last couple of months, but certainly, even if that expectation is hit at 150, that would be a 3-month average of 112,000 jobs. Certainly, the FOMC would be looking for upwards of 200,000 as an average, and certainly throughout 2013, the average was just below 200,000. So, still disappointing numbers out, and likelihood is of again a disappointing number today. Weather related, weather in inverted commas, has been the key buzzword. It occurred over 100 times in the Fed Beige Book recently, and certainly the commentators and even the Fed are sort of suggesting that the weather is playing a significant role, and that it continues to be an excuse for traders to look past these periods of bad data and push the markets higher. So that's at 1:30 this afternoon. Watch out for that. My chart of the day today is the FTSE 100. Actually, I've been disappointed. The S&P 500 has been consistently pushing higher, as I said, in the last few days. Even the CAC 40 as well has been showing strong gains as well. But the FTSE 100 and also the DAX have been very disappointing. I think they've been drifting lower, and I'm very concerned that the FTSE is losing upside momentum in this move. It certainly seems to again once more today be falling away. This is on the daily chart. You've got the MACD with a crossover sell signal. You've got the stochastics in decline. You've got the RSI also in decline as well. So generally what happens is in the last few times that these occasions have been seen, FTSE has been correcting back, and I think what we could be seeing is a similar sort of move in the FTSE in the coming days, back towards 6,700, which is a fairly strong fairly strong band of support around about these lows from the old January lows, and also a peak high in middle of February as well, and also the correction low that we saw on Monday is around about that 6,700 mark. So that's where I think FTSE could be coming in the coming days. So I wish you good luck in your trading on FTSE. And sorry, this is very quickly. This is the intraday chart, and once again we've seen a breakdown today, back below the lows of the previous few days. So that sort of opens up now, I think, correction back towards these key lows that we've got in place here on the intraday chart. I think 6,730 is certainly the first one, but then I think you're sort of back towards the 6,700 mark, and 6,670 odd was the low from Monday. 6,673 was the low. So I think we could certainly be in for a bit of a correction, and certainly the technical indicators are also suggesting a drift lower. So yes, sorry, good luck with your trading on FTSE today. Watch out for non-farm payrolls at 130, certainly the big number. Could be a bit of consolidation in front of that, but after 130 there could be a bit of a move. So I wish you good luck with that, and I will speak to you later. Thank you very much.